Hello. So the last week was pretty good for stocks. We finally beat a 7-week losing streak. Currently, our S&P 500 had the second worst quarter in history. Our NASDAQ had the first worst quarter in history. Our first quarter for the United States GDP is on a negative, and we're probably in a recession during the second quarter, which we're only going to find out about in the third quarter. Finally, we got pulled out of a bear market for S&P 500. We are now considered correction market. And for the NASDAQ, we got pulled out of a market collapse. We are now in a bear market. Market correction, 10 to 20% down. Bear market, 20% to 30% down. Market collapse, 30%, and so on. Heck, even today, Monday, the crypto market is moving. It's finally going up. So the question is, are we out of the danger zone? Are we going to make a comeback? And the truth is, I have no idea. I have my own personal thoughts on it, but everybody has an idea. And ideas are just cheap. You never know what's actually going to happen. But there is something very, very interesting. I was reading the Wall Street Journal, and it says that President Biden is going to meet with Jerome Powell, the head of the Federal Reserve, to talk about inflation in the United States. The two will discuss the state of the American and global economy, according to a White House statement. It's the first meeting between the two since Biden in November announced his intention to nominate Powell for a second term at the helm of the U.S. Central Bank, according to the record of the Fed's chief public schedule, which is available through March. This is actually a better article that I came across. It says the federal rate hike pause in September may make sense according to Bostic. Bostic is one of the federal chairs. Federal Reserve Bank of Atlanta President Raphael Bostic said policymakers could potentially pause interest rate increases in September after hiking by a half point at each of their next meetings. FOMC, Federal Opens Market Committee, they meet 8 times a year. The next meeting is going to be June. The next meeting is going to be July. They skip August, and then they're going to have a meeting in September. It's almost certain that in the next 2 meetings, we'll be raising 50 basis points. I have my own theory. I believe that the next CPI report and the one after that one and the one after that one is going to start reducing our inflation numbers. The reason I'm saying this or hopeful is because we went down from 8.5 inflation to 8.3 inflation. Now, a lot of people are saying, Adam, that's not really a big deal. And I'm not talking about the actual numbers. I'm talking about the actual inflection point. I'm not saying that inflation is gone. I am saying we might have reached a tipping point, the top of the peak. Now it's going to take a while to recover, but reaching the top of the peak is a very good thing. Now, hopefully, we're going to have a slow and steady decline of inflation as interest rates go up. So if we know that interest rates are going to go up 50 basis points in our next 2 meetings, and we're going to have 3 CPI data reports in that meantime, hopefully, if we get negative inflation, like inflation is going to go down, hopefully they're going to raise the interest rates instead of 50 basis points, 25 basis points in the meeting in September or maybe the meeting in October. If that happens, I believe that our stock market will start to rally. That's just a prediction. I'm not a financial advisor, purely entertainment and education. I'm just sharing my thoughts with you guys, which is not an easy thing because a lot of people like to point fingers when people are wrong. Well, surprise, surprise, mofos. Everybody is wrong in their life. But it takes guts to talk to people on the other side of this lens and take the criticism. And by all means, YouTube likes when I get comments, YouTube likes when I get trolls, and YouTube even likes the dislikes, believe it or not. So please come on board and show me some more hate. And I quote, I have a baseline view where for me, I think a pause in September might make sense, Bostic told reporters Monday following a speech to the Rotary Club of Atlanta. After we get through the summer and we think about where we are in terms of policy, I think a lot of it will depend on the on-ground dynamics that we are starting to see. My motto is observe and adapt. If you listen to what I've been saying in my last couple of videos, ever since the last CPI report, this kind of falls in line to the way that I'm thinking. Let's see what's going to happen. However, after our 250 basis points rate hikes, it's possible we will then see a 25 basis rate hike. And if that happens, like I said, I do foresee the stock market starting to recover at that point in time. And this is what I'm getting prepared for. And I quote, I'm at 50 basis points as long as the economy proceeds as I think it's going to, Bostic said. If inflation starts moving in a different direction than it is right now, I'd have to be open to us moving more aggressively. And I want to make it clear that nothing's off the table. As we go through the months, we will see how it plays out. He's saying that if inflation keeps going down, then possibly we're going to reduce the aggressive rate hikes of 50 and maybe go to 25. But if it goes back up, they can get even more aggressive to 75 basis points or 50, 50, 50, 50. Bostic said he is forecasting inflation will likely be in the high threes range at the year's end. I don't agree with him. Currently, we have 8.3%. For us to get to 3% at the end of the year, what do we have left? We have June, July, August, September, October, November, December. We have 7 months, which means if you want to go 8.3 minus 3, we need to reduce 5.3 over the next 7 months. If you take the 5.3 that we want you to lower the inflation rate and you divide it by the amount of months that we have left, that means that we need to lower inflation by 0.75 every single month for the next 7 months. To give you an example, the last CPI data, we went down 0.2. I think the biggest drop of CPI that we had, if I'm not mistaken, was like 1%. It's going to be very hard to get that 0.75%. It's going to be pretty aggressive. But it doesn't mean that it is not possible. And I quote, Bostic told his Rotary Club luncheon audience that the Fed's goal was a soft landing of bringing inflation down to 2% and slowing the labor market to a more normal function, adding it would require dexterity to achieve. It's hard to know exactly how far or how hard we're going to push, Bostic reports, but I think getting us somewhere in the 2 to 2.5 range by year's end would be a good place to get to. Yeah, 100%. If we can bring inflation down to 3%, let alone 2.5% or 2%, that would be great. Shoot. If inflation goes down to 4%, I would be quite happy. And I honestly think that the entire market would be ecstatic if that actually happened. Is it going to happen? Nobody knows. It's going to be very interesting to see what's going to happen in this meeting on Tuesday. I did read this article where it says lumber prices slump with rising interest rates. Prices shed more than 50% since March when the Fed began raising borrowing costs to slow inflation. But then I read this article where it says gas prices hit record highs as Americans take to roads on Memorial Day. Americans hitting the road for Memorial Day weekend were greeted with a record high gas prices as the average cost of a gallon of fuel hit $4.62 nationwide. Fact of the matter, nobody knows what's happening, but there's definitely a couple of things going against this rally. One of the things going against the rally is obviously inflation is still rampant. We don't know if we're getting that inflation under control, but let's assume that we are getting inflation under control. And that's a huge assumption. We still have this Ukrainian and Russian war. That's not going away anytime soon. If you are from Eastern Europe, speak Russian, Ukrainian, or know anything about the Soviet Union, you know that Vladimir Putin cannot lose this war. He has to come out a winner. Number one, he has to save face, but more importantly, he has to save his life. I honestly don't know if he's going to survive this, not only politically, but physically, if he does not declare some type of victory. Now, it doesn't have to be a full-blown 100% victory, but it most definitely has to be a victory that's perceived as a victory in front of his own country. Also, make no mistake about it, American companies are hurting by pulling out of Russia. A lot of companies, for example, NVIDIA, they forecasted lower earnings, not only to Russia, also to China lockdowns, but Russia is 2% of their revenue. Now, 2% doesn't sound like a lot, but when you have a $500 billion company, 2% is absolutely massive to the bottom line. So a lot of companies are suffering. And finally, there are going to be a lot of layoffs that are going to happen right now. With a lot of layoffs, you don't know what's going to happen to the United States economy. A lot of people are now going to go to unemployment. A lot of big box retailers are going to be doing more with less staff. But that's going to increase their bottom line if more people are spending. However, if less people are spending because they're out of work, this is going to hurt the bottom line of companies. At the end of the day, guys, this video is not to tell you one way. This video is not to tell you the other way. This video is to keep you informed and read very expensive articles that I pay for from Wall Street Journal, Barron's, Seeking Alpha, and Bloomberg, amongst other publications. Tomorrow is Tuesday. It's going to be a short 4-day trading week. And to be honest, I'm going to keep telling you and keep telling you and keep telling you. I am not scared of what's happening right now. I prepared for what's happening right now. And as I told you, I got around 50,000 on the sidelines that I will be deploying into the stock market. I got consistent buys in cryptocurrency right now. And I'm learning one thing from this. And you guys should learn one thing from what's happening right now as well. Be a stronger, more disciplined investor. What do I mean by that? It's easy to make money and it's easy to be positive and it's easy to make all the right moves as everything is going up because you cannot do no wrong. And all you got to do is look at YouTube. Look at all these financial channels, all these financial YouTubers. Man, when I started my YouTube channel, I'm like, bro, all these people never made money in their life. Not all of them, but most of them. And all of a sudden they have a finance YouTube channel. I'm like, you never made it in the real life. All your money came from this upturn. All of a sudden, you're a financial guru, a financial genius. And all these people, all they keep saying is DCA the dip, buy the dip. Not too many of them are actually analyzing or talking or giving you a true, honest train of thought. Guys, hopefully, we're going to make it out of this. Hopefully, the economy is going to turn. And you guys can screenshot this. I truly believe that we are in the second half of this downturn, but we're not out of it. I believe that we have another 3 to 6 months of this downfall, but we were definitely on the second end that's not going to be as aggressive as the first end. Now, if by some chance or miracle we're out of this earlier, more power. I bought into my positions, my truly conviction plays, and hopefully I make a grip and my channel grows and I'm going to come out as a genius. But if this market is not bottomed out and this is something called a dead cat bounce and we're going to go lower, I'm prepared for that scenario as well. And I actually do have reserves to buy in. At the same time, I did have around $225,000 worth of margin that I've been paying off consistently. And this is now south of $200,000. So little by little, I'm going to keep picking out the money that I owe because having margin in this economy right now absolutely sucks. But if you have it, it is what it is. So when I say be a stronger investor and learn from what's happening, be patient and learn. It's not always great. And sometimes you have to prepare and you have to be a big boy. And you actually have to make big boy decisions that is going to affect your bottom line and your dollar. It's no longer what can make me 5x or what can make me 6x. Now it's like, oh man, how the heck do I survive? And am I actually a financial investor? Have a great Tuesday. Good luck to all of us. Thank you.